Good morning and welcome to our presentation on the Community Benefit Reporting for Charitable Hospitals webinar. My name is Mary Catherine Gleason. I am a manager in our healthcare strategy practice. I'm located in Denver. We're just very excited to have all of you on the call this morning so that we can talk through how to think strategically about community benefit, opportunities for improvements and optimizations, and then how it aligns at the end with your CHNA and broader strategic implementation. So with me, I have Aaron Hirschberger.
Thanks, MK. So as MK mentioned, we'll go through some community benefit reporting topics and also talk about the strategy and how it ties in with your community health needs assessment. But first off, again, as MK said, I'm Aaron Hirschberger. I'm a director. I'm located in our Cincinnati office. I've spent most all of my career working with hospitals in the tax space. I was a hospital tax director before coming back into public accounting. So for those of you that work in hospital systems, I know kind of the struggles you have with getting community benefit reporting and gathering that information. This is a topic that I feel is really important for community hospitals. I was recently at a conference and probably no less than 3 sessions and a number of kind of side conversations all around community benefit reporting as hospitals and the folks at hospitals just struggle with getting their hands around, like, what should we be reporting? How much are we in the norm of where other hospitals that are like us or other hospitals across the country, like, are our percentages similar to those other hospitals? So hopefully we can give you some of that background information throughout our presentation today. First off, I'd like to applaud those of you that dialed in from or registered that are sitting in our Mountain and Pacific times, because I can't think of a better way to start my Monday morning than a webinar on community benefit reporting. So hats off to you, and I applaud you for starting your day that way. As I was driving into work this morning, my wife called me, and she was kind of giving the lowdown on her day, and I was telling her that I had the webinar this morning, and I said, I would much rather do these in person because I miss seeing people's faces as we present, she had a solution for me. So if you can see behind me, I have bobbleheads on my credenza. She said, well, line up some of your bobbleheads in front of you and then nudge your desk occasionally, and they'll nod and kind of give you a little bit of feedback when you feel like you need some feedback from an audience. So I didn't do that, so I don't have any bobbleheads in front of me. But anyway, so let's get started with the presentation, and we'll start off with a little bit of background. So when we talk about tax-exempt hospitals and community benefit reporting, some background I think will help you understand our topic and how it all plays together and why it's important. First, we'll talk a little bit about, like, what are these community benefits you're talking about? And then we will give you, there's more information on the slides than we'll go into, but a little bit of detail on how hospitals are recognized as tax exempt by the IRS and what those requirements are. Because what you'll see is one of the requirements talks about the promotion of health and community benefits. And as you see, as we kind of tie all this together throughout the presentation, the way we report out our community benefits are through a tax return back to the IRS that basically helps justify why we're tax exempt and why we deserve the tax exempt status that we've been granted by the IRS. So with that, let's dive into what are community benefits. So when we look at what community benefits are, they're programs or activities that provide treatment or promote health as a response to community needs and meet at least one of the following objectives. They're to improve access to healthcare services, enhance the health of the community, advance medical or healthcare knowledge, or relieve a governmental burden. So you'll see that definition. It's a pretty simplistic definition, and you'll see as we kind of dive into the different categories of community benefit that will kind of flesh out some of those topics a little more. The next thing to talk about are just in general how hospitals get their tax exemption under Section 501c3. So in general, requirements for a hospital to be a public charity under Section 501c3 There's basically four things that they have to do. One, there are some organizational requirements, and we'll go into each of these in a little bit of detail. Think about that as how we were formed. What are some of the elements that are in our organizational documents? We have some operational requirements, meaning how do we operate on a day-to-day basis that promotes health and meets our charitable mission. And then we'll talk a little bit about Revenue Ruling 69545, which is the community benefit standard for hospitals. So we'll talk about that. And then lastly, as part of the Affordable Care Act, and we won't go into these at all, Section 501R was added that had four elements that hospitals have to meet to be tax exempt. And those are, they have to conduct a community health needs assessment, which MK will talk about at the back end of the presentation. Hospitals' financial assistance policies, limitations on charges, and billing and collection practices. So those are all other requirements. So if we talk about the organizational test, speaking in very general terms, when a hospital is formed, its organizing documents must contain certain provisions stating several things. And these include, they limit the purpose of the organization to one or more exempt activities. So again, we're looking at exempt activities. It also limits the organization's activities to not more than incidental non-exempt activities. There are prohibitions around political campaign activities. We want to have language that limits us to not be a influence organization or an action organization, meaning it limits the amount of lobbying that we do. And then there's a last clause that we see on all the organizing documents that if the organization dissolves, what happens to those assets of the hospital when it dissolves, that they must go to a charitable purpose when the organization is dissolved. So those are some of the things that you see in your organizational documents, typically your articles of incorporation, bylaws, code of regulations, those kind of documents. And then on the operational test side, when we look at the operational test, in order for an organization to achieve its tax-exempt 501(c)(3) designation, there has to be a requirement that it operate exclusively for exempt purposes. There is a prohibition against annulment. So when we think of annulment, and then that last number 4, private benefit, sometimes those are a little bit confusing, those topics. Annulment are benefits provided to insiders. So think members of your board, officers, individuals that control the organization. So we want to prohibit any private annulment. There's also a prohibition against becoming an action organization. So we want to limit the amount of lobbying that we have. So we don't want to be a lobbying organization. We can have some minor amounts of lobbying. And then the last piece is a prohibition against substantial private benefit. Private benefit is then considered those benefits that outsiders would receive. You'll note that it says substantial private benefit. So most all charitable organizations, some private benefit is derived by outsiders, meaning a couple examples, like say you set up some incentives to attract physicians to participate in a joint venture. There may be some of those incentives that you're providing, that would be a private benefit. We just have to make sure that it's not a substantial private benefit. Another thing to really focus on is when we look at how a hospital operates, a hospital must also demonstrate that it operates to promote health of a class of persons that is broad enough to benefit the community. So that's, again, tying back into the community benefit standard, which we'll talk about in just a second. Again, the operational tests prohibit against distributing your net earnings to private shareholders or individuals. So unlike a corporation, tax-exempt organizations can't pay dividends out to shareholders. They retain those net earnings within the organization. So that's also very important to note. So more kind of hospital related is the community benefit standard. When we look at Revenue Ruling 69545, it outlines The test the IRS uses when it determines if a hospital was organized and operated for the charitable purpose of promoting health. It's also important to note when you look at the types of charity that are detailed out in Section 501c3, they talk about religious organizations, charitable, scientific, literary, or educational. Promotion of health is not specifically listed as one of those categories. So in order to demonstrate that benefit, Revenue Ruling 69545 lays out a number of tests that a hospital must meet in order to demonstrate that community benefit. And those are things like operating an emergency room that are open to all regardless of their ability to pay, maintaining a board of directors drawn from the community, maintaining an open medical staff policy, providing hospital care for all patients able to pay, including those who pay their bills through governmental programs like Medicaid and Medicare, using surplus funds to improve facilities, equipment, patient care, and then also using surplus funds to advance medical training, education, and research. And so I'd like to point out and kind of have you tuck away a couple things as we go through this, because you'll see the interplay that we have later related to this community benefit standard. So some of the things that are here, like operating an emergency room that's open to all regardless of ability to pay. When we start talking about community benefit categories, you're going to see that we have financial assistance under your financial assistance policy, which those are some of the things that fall under the emergency room. Subsidized health services, when we talk about maybe things that you can do as a subsidized health service, emergency rooms, providing hospital care for all patients able to pay under the governmental programs. We'll have Medicaid shortfall, that is one of our categories. Using funds to improve facilities, equipment, and patient care, medical training, education, and research. All of those are things that kind of fall into our community health improvement categories, health professions, education, and research. So there's this interplay on how the community benefit standard ties into our community benefit reporting that we'll cover in just a bit. And next we'll jump into kind of what I would call my bridge between here's some background on just technical topics on here's what community benefit is, here's how it ties into your tax exempt status, and then some more just why hospitals should care. As we deal with hospitals and we present Form 990s to board, one of the things we kind of really try to impress upon them is the importance of your community benefit reporting and how that really paints a picture of what the hospitals do in support of the communities that they serve. And one of the things that we see and have seen for a number of years and really gave rise to Form 990 Schedule H when it came into existence were pressures coming from the community, regulators, politicians saying, are tax exempt hospitals doing enough to warrant their tax exempt status? Or are we giving them tax exempt status and they're just not living up to that standard that we expect them? And that we often hear these arguments that our tax exempt hospitals aren't any different than our for-profit hospitals. They're doing exactly the same thing in the community, which most of you that are at tax exempt hospitals would push back and say, you know, we operate differently. We think about how we interact with the community differently than our taxable counterpart. So you wouldn't have to spend much time doing a quick Google search to pull up a couple articles like I have highlighted on the screen. We see the drumbeat coming out of Senate Finance Committee, House Ways and Means. I think there's an article that pops up here from Bernie Sanders saying, you know what, hospitals aren't doing enough. So it's out there. We consistently see that pressure on hospitals to justify their tax exempt status. And one way that you tell your story of what we're doing to justify that tax exempt status is the reporting that you do on your Form 990 Schedule H. So the next area that we will walk through are the Form 990 Schedule H, and we're going to talk about the different areas that are reported on the return. And for those of you that maybe aren't tax geeks, Form 990 Schedule H, the Form 990 it's filed annually by tax-exempt hospitals. So it includes all of your financial information, compensation reporting for executives. But the area that we're covering is Schedule H. And Schedule H on Form 990 covers a lot of information. So it's going to cover information related to your 501R compliance. So when I mentioned earlier about some of those organizational requirements, I mentioned 501R. Schedule H includes topics around your community benefit reporting that we'll talk about, your community health needs assessment that MK will talk about at the end. It also talks about and provides information related to your financial assistance policy, your billing and collection practices. All of those things are contained on Form 990 Schedule H. And we're going to walk through one particular section of that. Again, it's the community benefit reporting. So this table shows up on page 1 of the Form 990 Schedule H. And I'm going to talk through a couple of these columns, and I'm going to jump ahead and then I'm going to come back because I'll show you what we're talking about. So these definitions that I'm going to talk about are on the subsequent slide, but I'm going to stay on this slide and talk about those definitions just so you can see how the form looks as we talk about the definition. So I'm going to highlight a couple. Let's see. This will be awesome if I can do this, if I've mastered any kind of tech. First, we'll start here with the total community benefit expense, and MK smiled, so I think maybe you can see that. So when we talk about what is that community benefit expense, the community benefit expense is going to be the gross expense of an activity that you conducted during the year. So it'll include both direct and indirect costs, supplies, expenses related to that activity, as well as indirect costs, which are those things like space, utilities, custodial, security, all of those kind of indirect costs that may help support a community benefit activity. The next thing we want to talk about is column D, which is your direct offsetting revenue. So if you think about, and a good example of this is always kind of the Medicaid shortfall. We've got costs related to the Medicaid program of providing the care to those individuals that are eligible for Medicaid. And then we have the reimbursements that we receive for that treatment. So we have to report both the revenue that we receive and also any direct offsetting reimbursements that go against that, which gets us to our net community benefit expense, which is in column E. So when you think column E, that's just a math exercise of taking our community benefit expense less direct offsetting revenue, gets us to our community benefit expense. So this is the magic number that a lot of people always want to kind of compare, like how much community benefit did we provide? You'll often see that this should tie out and maybe build out into that community benefit report that your hospital system may produce annually. The other thing that we will focus on a lot in kind of the subsequent slides when we do kind of some trending is this number in column F, which is the percent of total expense. So that percent of total expense is going to take that net community benefit expense number in column E, and it's going to be divided by the total expenses on your Form 990. So the statement of program service expenses that are on your Form 990 is going to be the denominator. The only thing that we adjust for on that is we would adjust out any bad debt expense to come up with that percentage. So that gives us our percent of total expenses. And I'll give you maybe a little bit of, as we kind of look down these columns, so the things that we'll talk about in the subsequent slides are financial assistance at cost, Medicaid shortfall, cost of other government means-tested programs, and then we drop down here to other benefits, and we have community health improvement services and community benefit operations, health professions, education, subsidized health services, research, and then cash and in-kind contribution for community benefit. So when you look at that table, when we do the Form 990 and work with our hospitals that we serve to kind of populate this table and file it, typically what we see, and this is supported by the numbers that we'll show you later, these columns or rows A, B, and C, they will make up almost roughly 2/3 of the total percent of community benefit dollars or percentage that we report, where this lower section, E, F, G, H, and I, will, across those rows, will make up about 1/3 of the total amount. So we often see a lot of hospitals, as they're doing their reporting, they don't spend as much time maybe drilling down into these lower sections, just because there's not as, for the amount of time and effort that it takes to come up with that information, there's just not as much movement in terms of dollars or percentage added to the table that you'll see. However, the one thing that I would say is you're building out your community benefit and your story that you're telling to the public. A lot of times, the things that are baked into these topics really sound, when you're telling your story, they sound kind of build out the full picture and the color of all the things that you do. Whereas the financial assistance, I mean, that's purely a dollar amount. Granted, you can get stories from the individuals that have benefited from the financial assistance that you provide. But a lot of the things that are down here, and we'll talk about, we'll go into those rows, provide a lot of color that I think tells a really good story for tax-exempt hospitals. So let's start out with, and these are just the definitions of those columns or that we talked about earlier. Financial assistance at cost, so this is going to be the first row. Think of this as your charity care. Again, it's going to be cost, it's not charges. It does not include bad debt. It also does not include, if you think about discounts to individuals that don't qualify under your financial assistance policy. So maybe if you've got some discounts or self-pay discounts for individuals that don't pay under their, or don't qualify under your financial assistance policy, those kind of things wouldn't be included here. Very important that you're doing costs, not charges. Every once in a while, we'll see a 990 that has a number that's really large, and maybe we push back a little bit and they're like, oh, that was charges, not costs. So we have to adjust that. The next row is Medicaid and other means-tested government programs. So these, again, are going to be your Medicaid shortfall, as well as other means-tested government programs. Probably the most common one we see is the state children's health insurance program. In terms of kind of the frequency that we see things happen, we almost always see people report charity care. There's usually charity care or financial assistance. Most often see Medicaid shortfall. Means tested and other government programs, that's a line item that a lot of times we don't see a lot of hospital organizations report. The thing that you will see here is Medicare shortfall is not included in the IRS definition of community benefit. If I had a page 2 of the Form 990 Schedule H, you would see where you could report your shortfall from Medicaid. However, the IRS does not include that as a community benefit. You can, however, add in your disclosures why you think your Medicare shortfall should be included as a community benefit. So now we're going to drop down. If you go back to that picture that we talked about, if I can jump quickly. Maybe not. We're going to go down to this section that's below this other benefit section now. So now we'll start talking through those. So community health improvement services and community benefit operations, these are activities that are subsidized. So these are community health improvement services. Those are activities that are subsidized by the hospital and carried out to improve community health. Community benefit operations are activities associated with conducting your community health needs assessment or administering community benefit programs. So if you have costs of staff that are specifically tasked with tracking community benefit, think of things like that as falling in there. Community health improvement services generally don't generate inpatient or outpatient revenue. You may have some nominal fees associated with those, but they're not typically things that you're charging patients for. And we'll go through some descriptions and also some more examples of those. And when we look at what, in order for something to be reported as a community benefit or community health improvement service, you generally want to show that that need is demonstrated through either a community health needs assessment that you conduct, a documented or demonstrated community need or request from a public health agency or community group, and then the involvement of unrelated, collaborative, tax-exempt governmental organization as partners in the activity or program. So it just isn't everything that you do falls into that category. One of the things that we really want to look at when we do community health improvement services is they're not things that could be considered marketing in nature. So we want to avoid counting anything that we would think about where we're doing an activity to increase market share. So say we open a new hospital in a new location and we hold a big health fair to make sure that the community knows we're in the market. We want to avoid counting those kind of activities. We want to instead focus on those health fairs that we're providing maybe in a lower income area where the thought and the activity is because there's a demonstrated need that we're there to help people get access to care or understand the programs that we offer. So when we look at community benefit or health improvement services, activities generally include things that are broadly available to the public and serve low income consumers. Again, like I mentioned, those are a key. We look to activities that reduce barriers for accessing health services. We look for activities that address priorities of the federal, state, and local government. We also look at things where we're helping the public health department leverage their activities. Anything that would become the responsibility of a government or other tax-exempt organization that we take on, those are all kind of things that could fall in, as well as where we're doing things to increase the general knowledge, health knowledge through activities. So let's look at a couple examples. Community health education, community-based clinical services, healthcare support services, self-help programs, think smoking cessation, weight loss programs, pastoral outreach. Those are all some examples of community benefit reporting services. And I just mumbled through that. Community health improvement services. Sorry about that. So we are now on to your next check-in. Give you just a couple seconds to do that. And we'll jump into the next section, health professions education. So as we're thinking about health professions education, these are programs that result in a degree, certificate, or training necessary to be licensed to practice medicine or as a health professional. We're avoiding programs that are exclusively for your employees. So I think this table was kind of helpful of some things that might fall into health professions education. Scholarships for community members would be reported. Continuing medical education for community physicians, yes. If we're providing scholarships for staff members, that would be no. Continuing medical education for your own staff is not counted. However, if we flip that and we have nurse education graduates that are free to seek employment elsewhere, so we have a program training nurses that can go out into the market and seek employment, that's counted. If we require those same nurses to be hired by the hospital, then that wouldn't be counted because that's a benefit to the hospital. So when we think about health professions education, direct costs, we're going to think stipends, salaries and fringe benefits of faculty that are training your interns, residents, salaries of those interns and residents directly that you're paying, so lots of different things, scholarships to community organizations. Next component, let's talk subsidized health services. So when we look at, kind of go back thinking through that table and the bottom section of the categories, subsidized health services is one of the categories on that lower section that we typically see if hospitals do report that the percentage will be a little bit higher compared to some of the other line items like community health improvement, health professions education, research, or cash and in-kind contributions. So subsidized health services are clinical services provided despite financial loss to the organization. One of the key things that we look at when we look at subsidized health services is we have to do a carve out. So when you're looking at subsidized health services, we want to make sure that we're carving out that we don't have services or the loss from Medicaid shortfall or our financial assistance when we're calculating that financial loss on that service line. And in order to qualify as a subsidized health service, the organization has to provide the service because it meets an identified community need, and the service meets an identified community need if it's reasonable to conclude the organization that if it no longer offered that service, the service would be unavailable in the community, the community's capacity to provide the service would be below the community's need, or the service would become the responsibility of a government or another tax-exempt organization. So as you're thinking through your service lines, really take a second look at that if you're not already reporting subsidized health services to make sure that you're capturing those where you can. And some examples of things that would fall into that bucket, NICUs, addiction recovery, inpatient psych units, emergency and trauma services, satellite clinics designed to serve low-income communities. Again, be careful that when you're thinking about those, that you're thinking about how they tie into a community need and that we're not parking those in the affluent community in town and then saying that that's a subsidized health service. We want to make sure that they're focused on low-income communities as well as health programs or another subsidized health services. Again, make sure that you're not double counting. That's one thing that we've mentioned multiple times here, to make sure that we're not counting that's financial assistance or the people that those costs or the Medicaid shortfall. A couple other things, research. Research is any study or investigation, the goal of which is to generate increased generalized knowledge made available to the public. So I think one of the things you really want to take away from this is this section here, made available to the public. A lot of times we may see hospitals might be contracted by a corporation to do some research that would not be available to the public. So that would not be a community benefit activity. Examples about types of research are listed here. So there's a number of those that you could think through. When you're thinking about the costs that fall under the research, you're going to, again, think salaries and benefits of researchers and staff, the facilities, your research facilities, equipment, supplies, all of those kind of things can be used as you're capturing that data. And then the last component that we're going to talk about before we start looking at some of the trends in the community benefit reporting are your cash and in-kind contributions. A couple things that I think are really important as you're thinking about, not everything that you give away here counts as a community benefit. So cash and in-kind contributions are made to organizations and community groups that have some sort of restriction in writing to the group that you're receiving that those activities are community benefit activities that they're using those dollars for. So they can't use them for everything. A couple things that don't count as in-kind. So if you would happen to make a payment to a governmental organization in lieu of taxes to offset or not have to pay state property tax assessment, that would not be a cash or in-kind contribution that you would report as a community benefit. Also, if you are a teaching hospital and you've got an affiliated university that provides your medical or your faculty for your medical school, those contributions or payments that you're making to that academic or that university college, those are also not countable in-kind contributions. So be on the lookout for those. So next are trends in community benefit reporting. So we'll jump here and I'll give you a little bit of background on what we pulled and why. So we pulled from CAUSE-IQ all of the tax-exempt hospitals in the United States and the District of Columbia from 2016 to 2022. We pulled all of the Schedule H data from those hospitals. And kind of year over year, roughly 2,000, a little over 2,000 hospitals per year show up in the year over year reporting. We group them as either small, medium, or large based on the expenses of that hospital facility, with small being less than 75 million, medium being between 75 and 500 million, and then large 500 million or greater. So that's how those, you also see that all of the amounts are reporting that percent of total expense. So when we talk about what we're reporting, we're showing you this percent of total expense amount that would show up on that table. So that's what we'll be showing you. And to me, this is very helpful information for hospitals from the standpoint of when we go talk to hospital management, we present Form 990s to boards or committees of the hospital. One of the questions that's always asked are, how do we compare to our peers? Because everybody sees a percentage and we present the return and give them a percentage, but they always want to know, like, is that percentage good? Is that bad? Am I at the high end? Am I low, middle? Like, where am I? So hopefully this information will kind of help you benchmark where you're at. A couple things that I will say, though, are, again, this is on all of the U.S. and the District of Columbia. You may see variations if we would break this down at a state level, that you may have different trends when you look at just, for me, state of Ohio. MK may look at Colorado, and we may see different trends just based on individual dynamics that happen in your state. One of my recommendations to our hospitals that we work with are, let us help you benchmark against kind of peer hospitals. So we look at and say, well, what are your peer hospitals that you look at and benchmark yourself against? Whether those hospitals we're looking at the same size, whether they're urban or rural. If they're a specialty hospital, like a children's hospital, we may say, well, let's look at just children's hospitals or other specialty hospitals. We may say we want to look at just states. So there's a lot of ways to benchmark this. For what we're doing, we are just looking at, again, just all of the U.S. You'll also see that we give you kind of the highlight of that percent of total expenses across the years, and we're also going to break out for you the frequency of 2022. So we look at all of the hospitals for 2022, and we show you in different segments where all the hospitals lined up and where they fell out in their reporting. The financial assistance, and again, we'll go through these pretty quickly, and I'll just kind of highlight some trends that we see here. If you would look at the all section down here, you'll see that there's generally been a trend of declining financial assistance as a percent of total expenses over time, especially going back to, I think our high point was in 2018 for most of the hospital sizes or groups. Over to 2022, it's generally been a trend down, other than we had a little bit of a blip up in 2020. Some of the things that may be contributing that, Medicaid expansion, so we have fewer people that are eligible for or may need financial assistance, and they may now be falling into our Medicaid shortfall bucket. And then here's the frequency when we look at just 2022. And again, on the left axis, we're going to show you the number of hospital organizations. And then across the lower axis, the different percentage buckets that those hospitals fell into. And again, the average for 2022 was 1.55. So that's kind of in this range. Is where the average is, but you can see the majority of the hospitals still kind of fall out, and it gives you an idea of maybe where some of your peers are falling out on that range. Here's Medicaid shortfall, and you can see that the percentage is a lot higher. So we're talking about typically the largest percentage that we're going to show on the table is the Medicaid shortfall. And again, we're seeing the trend, that increasing trend that we've seen since 2016, and that's been a pretty general trend. The large hospitals may be a little bit different, but overall we've seen kind of an increasing trend in that Medicaid shortfall since 2016. And again, here's your frequency with the average falling out at 4.42, which is in here. As I mentioned earlier, the other means tested and governmental health programs, very small percentage, relatively stable and kind of flat, maybe increasing just a little bit, but pretty flat. But again, a pretty small overall percent for your other. And you can see on the frequency that the majority of the hospitals either have little or no other means tested governmental programs. Community health improvement services. This will be maybe just a slight increase since 2016, but again, a very small percentage of your overall. And this is where we talk about the administrative time that it takes to go through gathering all this information. Sometimes hospitals just weigh the cost benefit analysis of the amount of effort that it takes to report all of those activities against the overall benefit and how it moves the needle on their community benefit reporting. And again, if we look here, your average is 0.4, which falls here for the average, but most of the hospital organizations are falling into the bucket of the 0 to 0.25%. Health professions education, generally pretty flat. You can see that the bulk of those activities are falling within the large organizations, which isn't shocking, given that that's where a lot of our residency programs and training programs are, and maybe not down at our smaller organizations. And again, you're going to see the frequency with most of the organizations falling in that very 0 to 0.25%. Subsidized health services, this has been gradually increasing, which maybe that's from folks just getting the message that, hey, this is something we can analyze, push out, or it can also be just the trends that we're losing money in some of these other areas and now have them to report. So again, this is the larger percentage of those bottom areas that we'll report on the table with an average of 1.71. If you look, a lot of your smaller hospitals have a higher percentage here than the larger hospitals. So you have a lot of distribution out at the different levels, but still the majority are on a pretty small percentage. And this will be your last check-in poll until I think we maybe have a actual question for you at some point. We'll let you check in, and then we'll talk about where we end at the total percentages. So this is, this is research. Again, research, relatively flat. Bulk of those are sitting at your large institutions. Again, not shocking that that's where that is. And again, very small amount, which you can see the frequency fall in a very small, the majority have very little that they're reporting. Cash and in-kind contributions, this has been gradually declining since 2016. You see higher percentages at large institutions. And again, you see the distribution. It's probably the one that I like the best, that you'll find most interesting. And I would say maybe comes at a little bit, as we pull this data, my general thought would have been that this would have been trending down. However, we have a slight trend up over time since 2016. And it has stayed relatively flat across all of the sizes of institutions. But our average is 9.12% in 2022. And you can see where that falls out. So 9.12, my eyes line up right, would be here. And you can see kind of the distribution across the hospital. So that's community benefit reporting. And now we'll let MK talk a little bit about how it ties into community health needs assessment.
Great, thanks, Aaron. So you did a great job laying the foundation for the why, which makes my job a lot easier as we're thinking about the CHNA. So throughout, you referenced the community health needs assessment. I know every organization kind of calls it something different. We call it CHNAs. So that's the terminology I'll be using. For those of you where this might be your first cycle or you need a refresher on it, we at Forvis Mazars have kind of two approaches. So the first one is compliance oriented, which is much more of what kind of Aaron's talked through. So I'm going to focus on that upper line of our process visual. The bottom is organizational alignment. So this is how to think about your CHNA aligning with your organizational strategic plan so that you've got alignment both within leadership, but also from kind of a reporting perspective, implementation, that you're optimizing your resources that you have around execution and change. So from a compliance perspective, you have to kind of identify your community, make sure in it include medically underserved, vulnerable populations, and perform a market assessment. So think of this as your quantitative data. And you're looking at both inpatient, outpatient data that's within the four walls of your hospital that you own. You're also looking at public health data. You likely partner with other people in your state or your health department in the community to perform this market assessment. So again, you're looking at trends and a lot of quantitative data. The second piece is the community input component. So this is where you're bringing your qualitative data. So you're conducting focus groups, asking interviews with key leaders, both governmental. Our kind of sweet spot we like to see is we like to see some nonprofits who offer kind of adjacent services. So some of your social services, government, city council members, Chamber of Commerce. We'll also like to meet with religious organizations, anyone who does education that might fall outside of kind of the school board, but we will sometimes recommend meeting with them. And then other key, what I'll call sub-community leaders. And those may be official positions, they may be unofficial positions. But the goal of that is trying to get in the pulse of what does the community perceive as their greatest health needs? So as Aaron was referencing earlier of a demonstrated need, the community health needs format automatically includes that kind of identification process in its compliance. So once you've got your quantitative and your qualitative, then you kind of go through that prioritization exercise. So what I always like to say is you can't boil the ocean. So we know that there are lots of health needs, but you've got to focus on a couple. And so we encourage doing kind of a meeting of the minds within your organization to talk through what are the quantitative findings, what are the qualitative findings, and what's rising to the top, recognizing that you can't address all of them in one cycle. And so then based off those top needs, that also then helps from the community benefit perspective, where you can kind of start to earmark areas where you can look internally for additional work being done to support those identified needs. So this last section, so prioritization, implementation, reporting, and ongoing monitoring are kind of the core areas that I'll be focusing on. So then implementation plan, as you know, that's a required kind of separate documents that you can complete after your fiscal year. This is tied directly to those needs identified. So you've identified the community health needs. You've now started to think about how you're going to implement them, how you're going to address those health needs. So we're looking for strategies and initiatives along the way to help drive execution. And then obviously there's reporting responsibilities from an accessibility as well as from a tax perspective with the IRS. And then ongoing monitoring, so that annual 990 form of kind of demonstrating that you are doing the work, you're still focused on it, your CHA is not living on a shelf untouched. So with that, I'm going to dig a little bit deeper into the prioritization and implementation planning. So like I was mentioning earlier, what we like to see, and we've seen a trend in several more of our clients that are population health agile organizations, I'll say, is they're integrating their CHNA with their strategic planning process. So they're doing the CHNA first, and it's serving as a data input to their strategic plan so that as they are developing budgets, identifying priorities across the organization, cascading goals, that the CHNA is a part of that rather than living on its own. And the reason why we felt like this was a good fit from a community benefit perspective is that as we've been thinking about implementation, we've been encouraging for organizations to make their CHNA implementation more robust than maybe what is required from a compliance perspective, so that you can more easily track owner accountability, budgets that would be associated with key strategies and initiatives, so that as you get to your kind of annual reporting, you can look back and see key, and I'm going to pick access because that's an easy one that I see frequently, key costs associated with improving access to healthcare services in the community. That was a priority in your CHNA, so it's documented, and you've targeted underserved patient populations. So it's just an example of how spending the time on the front end with your implementation plan and how you can include in it can be very helpful in some of your other organizational initiatives and community benefit reporting kind of later on. The next piece that we have, and I'll kind of spend a little bit of time on this because I know we're about to wrap up, is the ongoing monitoring and reporting. So like I mentioned earlier, there is this annual component to what I would consider a 3-year cycle, and the IRS considers a 3-year cycle with CHNA. To be successful realistically, it's not just a compliance piece, it's really spending time thoughtfully and looking at your CHNA implementation plan that's hopefully part of your strategic plan to say what worked, what didn't work. Because you're able to do strategies and then acknowledge that, hey, this strategy actually didn't work. We thought it was going to work, so next cycle, we're going to roll it off. And you can kind of acknowledge that at the end of your CHNA. And so what we always encourage people is, market changes, national disasters, pandemics occur, natural disasters occur that can impact some of the strategies and initiatives you had around your CHNA. It can increase needs significantly, or it can also subdue if you have more of a decreasing population in your area. And so we encourage you to go back annually at a minimum and look at it. To really make my strategic planning heart happy, I say look at it quarterly, because then you're able to kind of be on the pulse. It's not getting to the end of the year scrambling from a reporting perspective to see, how much did we spend, how many hours did we spend on this. By having clear accountability of ownership, who's responsible for each strategy and initiative, also helps create some clarity within the organization of who to go to when asking for some of these estimates along the way. And so then, like I kind of mentioned, that ongoing monitoring. So we recommend annual, quarterly, if you really want to be making the most of it, thinking about how it integrates with your other areas of the organization. So I've mentioned strategic plan. I'm also going to mention, if you're in an ACO or you're in some value-based contracts, think about how your CHNA is going to impact this. A lot of the times, if you're tracking annual well visits and you're struggling to get patients in, or you are struggling with a lot of readmissions. If you look back to your CHNA or you look at some of those partner resources, a lot of the times you will hear from the community the main reasons why they are not able to access healthcare services, or what their main barriers may be that could be impacting you across multiple different channels in the organization. And how you think about these partnerships, how you think about implementing these strategies, the better the documentation you can do on the front end and really building out your implementation plan will be the biggest help when it really comes to documenting some of these costs in that kind of lower quadrant category of costs around community benefit. So with that, I'm going to go ahead and wrap up. And I know we have a poll coming up next, but wanted to say thank you so much for attending the webinar. We see some comments in the chat. We'll be looking through that. And if you have additional questions for myself or for Aaron, please reach out to us. We would be happy to either schedule time with you or follow up on any chats that we've had that we can address your questions. So
hey, MK, I'm going to respond to one of the questions that was on the in the chat, and just because if you're happening to look at the slides, the question was on the trend chart. We referenced that it's for 2022. Again, that's for the tax form year, so it could be for your calendar year filers for 2022, or it could be for fiscal year filers that had a fiscal year that began in 2022. So let's say you were a June 20 or June 30, 2023, you would still file the 22 form is when that data is on there. So just a clarification. But any other questions that you had, we will follow up outside of that. And thank you for your time today.